Well, good day, all. Ira Epstein of Linn Associates with your metal market wrap-up, and this wrap-up is for Wednesday, and we're at the 8th of December, 2021, about 6:30 p.m. Central Time. Apologize for not doing an update for you yesterday, but we are at that time of the year where my wife and I get invited to different events, and sometimes those events are earlier than we'd like, but that's how it works, and I can't get these done at this time of the year. I'm sure you understand that. Doesn't impact what I do for my paid subscribers. They're getting all the regular information. We're going to get data tomorrow that talks about CPI, wholesale prices. We're going to get jobs data. We got a lot coming out tomorrow, the weekly jobless claims. And, of course, natural gas, you're going to get some information on that. I don't like going through this data where they're looking for really hot CPI numbers. How's the market going to react to it? Is it baked in or not? Is it a peak? We don't know on that either. So sometimes it's smart to just stand aside, let the number come out, and decide what you want to do. When we look at gold, you can see gold maintains itself underneath the 1791.20 area, which is the 18-week average of closes. For the week, I almost slipped out of cord there. We're up 0.6%, $1.10. Hasn't really done much. Look at the sideways action and how the volatility came out of gold. Is it going to come alive on CPI data? I wish I could answer that. What I can tell you is suddenly, without this action over the past 2 days, we had a pattern of lower highs and lower lows. The market reversed course on Tuesday, followed through yesterday, which then gave you higher lows, higher highs, and that's still where the market is. So the market has got the trend up. It is under the 18-day average, and what did I tell you? I said that last week I was telling you that if we rally, look for your first resistance to be the combination of the 200 to 100-day average, and that's exactly what's occurred. Now, after the CPI data, I wish I could tell you that I know what's going to happen, but I don't. If you clear the 1794.30 area, then I think you're going to 1806.40, and if you close over that, I think, especially at the end of the week, that would be very bullish. Even if you break down under 1772.40, this is the important thing, you would not get a bear pattern. You'd have a higher high, lower low. That's important. Are we going to challenge the lower Bollinger Band if we break down? First question. Are we going to come up here and challenge these averages? Well, we're challenging the 100. Now is the 18 going to be the one? And we're still with an embedded reading. You're flirting with losing it. You've got a 19 reading. Any number that gets a close and the settlement, when you settled it, you got a reading over 21. I'd then say you've lost the embedded reading because you've already hit the 100. The target becomes 1806.40. So that would be a friendly event. The gold-silver ratio is just in a distribution number here against the old high of 80. That's all that you can say. Silver still has the embedded reading, and that rules the day. Short-term, like the gold, you have higher lows, higher highs. You've had a bearish crossover in silver. Right here, as you can see, the 18-day average of closes was over the 100. Yesterday, that's actually Tuesday. I want to take that back. Tuesday, you got under it, and you've not had any follow-through, which is sort of interesting. Normally, you get that follow-through, so I'm still looking for lower lows if the market's going to break down. Here's what I'm nervous about in the market, trying to be bearish in any way in the silver. I'm looking that the market has decided that Omicron is a non-event now. That's how the futures market's acting. It's acting like, okay, you get that third vaccine shot, away you go. We know that Pfizer's been out saying they're going to create another shot. It'll be ready in about 90 days, where it'll mix the Delta variant and the Omicron that it's specifically targeted for in there. But the simple fact is we're not seeing out of South Africa anything that says this is a worst-case scenario. And for those that are getting it that are in heavily vaccinated countries, we are not seeing anything other than, yeah, you can get the COVID again, but you're not getting as sick, and it's working very well, the vaccine. I was today getting some medical exams, my yearlies at the end of the year. That's where I was this afternoon, talking to my doctors about that. And that seems to be one of the things, all the news isn't in, but they agree that on the surface, that's certainly what it's starting to look like. Well, if that's the case, then copper should get a bid, and how could I be that bearish on silver? So until you lose the embedded reading, I'm a chartist, and that's the way that I am. In the copper market, the pattern is bullish. You got higher lows, higher highs, and you finally closed over the past 2 days, the 18-day average of closes and the 100. It opens the door for the possibility that if you get CPI numbers that drive the market in any way, not a negative number that scares it, maybe you're going back to the 446 level. You can't argue that, at least in China, their import-export numbers were stellar this week. So they're using iron ore, they're using the materials, they're manufacturing, and copper's probably in the play on that. When you look at the platinum market, here's what my eye goes to. You're losing that embedded reading tonight. Any close over 21 would do the job. Now, did we do that yet on a closing basis? No. This was the close today with a 19 reading. See that? So you need to get through tomorrow to know if that's going to be the case. Sorry about that, but that's the way it is. I do think it stops the shorts from wanting to press the market until they see the reports. Again, we had bearish crossovers here of these numbers. Watch this. That's not very much of a break off of that. That's my point. Has the market worn out its welcome on the downside? I don't know, but I'm paying attention. The palladium lost its embedded reading back here, and I still have a target of the 18-day average, and it's the one that is working well. So you're not getting a lot of play off the bearish crossovers of moving averages, but the embedded readings, when they're lost, you're getting the lift. In the dollar, I was disappointed today. The dollar had a bullish pattern. It was starting to flatten itself out in momentum, and the target could have been the 9,700 level. Today was a miserable day. You took the market, and now what do you have? You have a higher high, lower low. You got a bunch of nothing in the chart. Momentum's down and bias is down. If this market gets hit, you've opened the door for the lower Bollinger Band at 95.39, so that's what I'd be paying attention to. Now, it's going to be an important day tomorrow to see the report, the reaction to it, what we're all looking about. We're going to be writing about that in the morning and recording updates, if you will, that you might want to listen to. If you don't get our market information, this is your perfect opportunity to do it. Just go to our website. On the very top, it says free offer. Sign up for them. The Futures Trading Kit will get you the charting software that we have. You can sign up for a quick trial to our different programs here that'll give you a couple weeks access to our market letters and see what we write and what we tell our clients. So again, how do you do it? It's simple. One of the ways is you can cheat. You can call my staff. They will talk to you, and they'll have you set up, and literally on that phone call, you'll start getting everything. Or you can come up. You can go to the website at any point in time. I'm not even going to put that icon up. Just go to the website at www.iraepstein.com, and on the top left, just go there. I'm Ira. You have a good day.